startups, but public. Um, have you seen a Blab before or done one?
No, I think I listened to one that you did with Kanye.
Yeah. And yeah, it came out just like a podcast, right?
It came out like a podcast, which is great.
Yeah.
I'm trying to I just tweeted that out, but I'm trying to close down my other link so I don't get distracted.
Perfect.
Yeah.
Okay, sweet. So, I mean, there's a ton of stuff.
You look all business right there. all business.
Right. Absolutely. I need to shave. I need to get this whole thing situated. But good thing.
No, I mean, your headphones are serious.
Oh, right. Yeah. We don't mess around. Also, I mean, I know we've been meaning to do this for a while now, and you actually been on the Product on Podcast, 2 years ago. So it's great to have you back. There's a lot we want to get into, but first, let me say, Semil, welcome to Product on Podcast, welcome to Product on Live. Thank you for being here.
Yeah, no, this is fun. I remember, I think I was Ryan's second or third podcast or something way back when you were in that basement dungeon of the old Tradecraft office.
Yeah. Oh man, that's a good memory. Not a lot of people know about that. So it's a pleasure to have you back. And, there's a lot we want to get into, both professionally, intellectually, personally. But let's start off with the following question: when people ask you what it is that you do, what do you tell them?
Yeah, and by the way, just so everyone knows, like, we didn't prepare any of this, so I don't know what you're going to ask me. I think there are two answers I give. If the first click on the link is, I'll just say I'm an early stage investor in startups or new technology companies. If someone really asks, okay, if they're not in this industry, what do you do? And I tell them my role I view as like someone who's out there trying to identify, find, attract, recruit, and develop entrepreneurial talent. That's really, if you had to boil it down, what I view my role as.
Let's dive deep into that, because you're pretty good at it. You invested a seed at DoorDash, Coin, Chain, Hired, Instacart. These are Open Door. I mean, these are huge companies. What do you think you've found? Like, why are you good at identifying talent? What is you look for? How did you develop the skill?
Yeah, and I thank you for that, and I mean this, that I'm not sure I'm good at it, to be honest. I think time will tell. I try to just focus on meeting a lot of people and trying to identify patterns, not in the people necessarily, but in the business model that they're trying to pursue, or the technology that they're trying to pursue. I also, just on the founder side, I try to look for some kind of line of sight between something in their past and something today. It doesn't need to be, really, really hardcore, like a hardcore connection, but some kind of connection.
See, just like, what are you best at?
In an investing context, or just in general?
Just in general.
I mean, I think probably the way people have known me is that I can kind of quickly synthesize and structure thoughts from different sources. Sometimes in real time, sometimes pretty quickly, or in written word. And that people find that it's, I hope, efficient to like listen or read, because they might learn something as I'm doing that. That's probably what I would say. Most people will just say, like, you're a good writer, and I definitely appreciate that. But there's a lot that goes into writing that's a lot deeper than that. And so that's how I would describe it.
I'm curious, I mean, you've done a bunch of stuff in your writing, you're very active on Twitter, and in your investing. Is it curiosity that sort of ties, that threads your activities together? What do we think is like the underlying philosophy, sort of principle?
Yeah.
What you most care about?
That's a good question. I mean, I think there's two parts to it. One is definitely curiosity. I think a lot of people who work in and around startups, founding them, building them, investing in them, writing about them. Most of the people that you and I have met, right, are kind of irrationally curious people. And sometimes, you can be too curious. And so you have to have applied curiosity, right, that creates value. Um, I think the other piece of it is for me, and at least the writing and sort of communication or like engaging with people, is that we live in a pretty noisy industry, and there's lots of people. We're not veterans. You and I are both new, relatively. There's lots of new people coming in. There's lots of really smart people. Uh, Basically, everyone is default smart, right? And so you're trying to figure out who's what. And so writing for me is a way to help me kind of quiet my own mind and my own curiosity for a moment. Because otherwise you're just kind of all over the place. I didn't get to write too much this month, actually, because I've been busy with a lot of personal stuff. Nothing bad, but I already sense it like being pent up, like I've got to go do this. And I'm just lucky that a lot of other people find value in that. And so people um, sort of vote with their attention to read sometimes. I don't really intend to make like bold statements and such. It's just really to kind of quiet my own brain when I write. Yeah.
This concept of evaluating talent, I want to even push even deeper because you have a lot of inbound of people, trying to get your opinion on stuff, trying to see if you want to invest in their startup.
Mhm.
And if we could separate it in terms of like, you hear from people who are already in the scene, and you have to evaluate, their ability. And then you hear from people who are not sort of connected in the scene. Um,
Yep.
how do you know, what are your sort of litmus tests that you use to see if this person is worth? I mean, everyone's worth, but in the limited time, obviously, you can't pick everybody. Uh,
Yeah. So if somebody is sort of here and connected, and they're going to meet me alongside 100 other people, and so it's not hard to generate deal flow. I think after a while, if you serve people well and word gets out, you might get better and better deal flow, but it's not hard to gin that up. uh, Generally there, I just try to see if as a first cut, are the three areas that I'm investing in, does the entrepreneur fit into those areas? And and as I dig deeper, does the founding team and the idea kind of cut across the patterns that I'm looking for in those three areas? If it's not, and that's likely like 90% of the case to begin with, I either just try to help out over email. I try to figure that out over email before and offer to just help over email to the extent that I can. Most people who are here just kind of pass through, and they've got other meetings to go take. So it's kind of the inefficiency of the market, and it's kind of like the social piece of it. And so you just help out. I will definitely probably spend more time helping out people who are coming here or thinking about moving here, because I know what it's like to feel disconnected here. And so I'll if somebody is in Florida and they're looking for how to find investors here, but they're going to keep the company in Florida, I probably don't help as much because I tend to focus on things that are going to be more local. It would just be too hard to do that. But if someone is sort of in the process of moving here and looking to get integrated or to figure out what to do, I'll probably spend more time, even though I don't directly benefit from that, partially because the people did that for me a lot. And so I think that's why like the incubators and accelerators that you've seen pop up are super valuable, because generally if you come into the Valley, there's really no support network
mhm.
necessarily that's coalesced around what you're doing. And so they've done a really good job of institutionalizing that.
How it's really interesting. I moved to because I resonate with that as well. I moved from Detroit a few years ago, not knowing anybody, or not knowing many people, and I'm just
Mhm.
as smart as I was then, but it's, I now have a lot more context for things just because of being here. What else, besides YC, besides 500 startups, besides other accelerators, which, do take a huge chunk of your company, what are
Mhm.
other ways that people can easily sort of, or the things that we can do, or Silicon Valley can do to easier sort of acclimate people here?
Um, I think, I mean, I probably did this myself, but most people come here and you have a kind of primal urge, like to take care of yourself. I want to start a company and find funding. I want to find a job. I want to start investing. And probably the secret is, now looking back, is you should just, if you're not completely clear on what that is that you want to do, you could literally just come here and just start helping people, trying to help out. And then sort of opportunities will emerge. But I think that people, there's a trust element that's lost and a social proof that's lost, where people who can kind of come in too quick or too hot, it can kind of feel transactional. And so people have their guard up around that. And also it's just time and attention. Like there's just too much,
Right.
there's not enough time to like
Yeah,
meet
no, it's interesting.
everybody. So yeah.
What's I
By the way,
actually
are
I
you keeping
can't
track of the
see them
live
for
chat
some reason,
questions?
but I am getting a someone on my team is sending me them, and I'll be
Okay.
incorporating them. Um,
Okay. Oh, okay.
yeah, yeah, absolutely,
Of
absolutely.
course. You have a
Um,
whole infrastructure. Yeah. You're like a you're
thank
like a
you.
professional
This
radio
is a real
broadcaster.
this is a real passion,
I'm just
um, and it's lab team product that makes it happen. Are you excited about Anchor?
Yeah, I love audio. I love audio too. I was actually thinking audio. I haven't really tried it out, but yeah, I mean, there should be an integrated creation, connection to interest. Just something SoundCloud
Mhm.
probably has as a feature, but
Uh,
not as integrated with that. So yeah, absolutely. I think part of the issue is that good media, whether it's sports on TV or a podcast, they're produced in some way. And so I think being able to record and do that on the fly is great, but then there has to be production to really get an audience to listen. And I know this from working in the podcast world, that it's very easy to write a post on Medium or create a podcast. It's very hard to get people to really listen.
yeah. What are the three areas that you're
Mhm.
focusing on right now, and what are sort of the levels in between those areas that you were mentioning before?
Yeah, and so all this is on my site, but essentially I look for in sort of think of it as a third, a third, a third, third in consumer. So I'm really trying to look at consumer health applications and companies. I'd love to find more, frankly, and definitely looking for people who have started and have people using it already. Um, and then, I keep a broad lens in terms of consumer, because you don't really know what's going to pop up. So I'm looking at a consumer magazine that's been created on top of social media channels. So I'll look at a broad range of things that are just, kind of serendipitous. Um, in terms of enterprise SaaS security infrastructure, there I just look for people creating new categories. So there's really no comp, or uh, they're leveraging or creating a data set that they have unique access to. And then my kind of niche specialty area for this fund is what I call industrial IoT, industrial software. These are people that are building, drone applications, specific 3D printing software programs, distributed sensor networks that they sell into heavy industry, oil and gas, Boeing, defense, those kind of companies. On the last one, yeah, I mean, it was less of a thesis and more like market identification, and I can't really take credit for it. I sort of learned that secret from two investors that I invested in my previous fund. I was helping them with some contracts that they were negotiating, and I took out my iPhone calculator and I started to take like the number of devices times the per month charge times the length of the contract, and I was like, wow. I couldn't believe how many zeros were on there. I remember asking the founders, did I do my math correctly? Um, And so the secret there was that a lot of these large companies, if you have a solution that's ready to go, now that's not to trivialize how difficult that is. There's a high willingness to pay. And so what I found is that I started meeting a lot of these companies, and there was a pattern amongst these companies and founders. They were typically interdisciplinary by nature. They were not motivated by money. They would typically be very collaborative with other startups and share customers. They had a land and expand model where they would kind of cut into industry and then build out their product line. And that there was a real interest amongst the heavy industry to partner and help these companies. So I felt like, being a very early stage investor, I'm staking a little bit of my reputation on the fact that this market over the next 3 to 5 years will become more interesting to venture capitalists that will continue to support these companies, right? If I got that wrong,
When was the moment
then it's
that
going to
you
be a little bit
realized,
tougher.
that you sort of broke in as an investor, that you said, oh, I'm now starting to get significant deal flow. I'm now, I've made a great bet or two. Talk about that moment when you, made that.
Well, in March, I guess it's already March, right? Uh, so it's been about I started investing for real three years ago, March 2013. But to answer your question, when did I feel like I was really being an investor? It was probably this January, like 2 months ago. I've been I'm a pretty active person in the sense that I keep in touch with a lot of people, and I'm always available. And so I'm always talking to founders that I've, invested a little bit of money, or even ones I haven't. So you know how it is, right? You're always on. And I think you have to be, because it's kind of irrational.
Yep.
You have to enjoy doing it. But I think because there have been so many little market gyrations, and the market was sort of imbalanced to start, because I didn't know, I didn't really feel like I knew what I was doing and how long I would do it, or whether I'd be able to help out. I just was more passive about my role. So, I would help sort of on demand, but, I wasn't providing much more than a little check and, helping around the edge. And I think in January, I kind of felt that it was probably a good time. I'd seen enough data over the last 3 years and how I interacted with companies to probably take a more active role.
Right.
And so, yeah, probably just a couple months ago.
Yeah.
It's a very steep learning
There are a
curve.
couple of questions here about raising a fund.
Yeah.
There's a lot out there about,
Oh
raising
boy.
money for a startup,
Yeah.
but sort of raising money for a fund is a bit of a, not documented science.
Yeah, it's brutal. I mean, just be honest. I've had some like, in terms of being new and having a smaller fund, and having some success and return significant amount of capital relative to how much I've raised in a short period of time. I found it to be really, really difficult. And I think as I reflect more on that, it it makes sense why it's so difficult. I think the LPs, the people who invest in these funds, there's some structural issues in that they need to write larger checks. And so I had many people contact me and tell me, we really like you, have great references. Let me know when I can write you a $25 million check. And I don't really want to manage a $250 million fund right now. That's not my goal today. I think that you have to form a real partnership to do that. Like, my sort of model, or if Foundry Group out of Boulder, Colorado is a religion, I'm the disciple. I like the way that they've organized themselves. I like that they take concentrated bets. I like that they, sort of are thematic in nature. I like that they're an equal partnership. And every fund that they've raised is 225 million bucks. And so you can see a path to returning that, but you have to be concentrated when you do that. what I do now is not concentrated, right? Most people at seed are not concentrated. The other issue that comes up from LPs is that as more and more people become investors, so I'm part of the two problems that they see. They can't write enough capital into the smaller funds, and then they also meet 300 people like me, and it's really hard to differentiate. Well, who should I trust? Who's going to perform? Who's going to grow? Nobody really knows, so it's just easy to wait. Uh, yeah, I every week I have one or two people contact me about an introduction, about someone who wants to raise a fund, and I always sort of offer advice over email, but generally, I think a lot of people, one, who haven't done it, underestimate how difficult it is, and then two, if they've still decided to go do it, don't really understand how long it will take. So
And
it's
if you
definitely
knew
not an efficient
now what you knew
process.
when you were first starting, what would you tell yourself, or would you not do it at all?
No, I would definitely do it. I mean, I had no option when I started, and so I just I just did the minimum that I thought that I could. Now looking back, I wish I invested more out of that fund because it was a good fund, but it was really hard for me to raise the money. I think what would I have done if I could go back? So one is I would have in my first fund I would have invested, instead of just a million, maybe 5 million. And then two, I think, is I would have maybe raised the size of my funds earlier so that I could start
Right.
taking bigger checks and
And
spend less time fundraising.
was it mostly from
Yeah.
individuals? And when people come and say, "Hey, I want to raise a fund," do they do that mostly from high net worth individuals, or from VC firms, or family?
Yeah, everything, family offices. I have, there are people that we both know that have small funds that are mostly bankrolled by other VC funds, like significantly bankrolled. There's corporations that can bankroll people. There's smaller endowments. Yeah, so there's a lot of capital in the system. I mean, that's another thing I've learned from meeting a lot of LPs for the last couple of years is that there is just
And
more and
corporations, is
more
that like
money coming.
IBM or like consulting firms, or what types of corporations?
I mean, any kind of corporation you can imagine.
Right.
It just depends whether there's an appetite to do it. But if a corporation is sitting on tons of cash and they find a manager that they feel like can help them with deal flow or help them build into the valley and who has deal flow and that they really trust that manager, him or her, if they're sitting on $50 billion of cash, bankrolling a $25 million fund is no big deal.
Right. No, that's interesting.
Yeah, they just
What's
have to want to
something
do it.
just as an investor in general that you used to really strongly believe that you've changed your mind on, or you now see as fundamentally?
Yes. And I don't know if I would necessarily say that I believe this then, but that it's a large part of the narrative that you see online, which is a lot of people in the accelerator world, the seed capital world, the angel world, people who are not institutional investors will kind of talk shit about big VCs, large VC firms not doing their Series A, not doing their Series B. Um, they fundamentally do not understand how difficult it is when you're part of a fund. First of all, you have to put up your own money, and you have about 5 bets you can make over a 3-year period, where every time you make a bet, your partners have to support you, and you can never divorce from the company, right? Like anyone investing up until then, I know people who do, angel rounds, seed rounds, and they sell their stakes at the Series A and B. They're not meant to be life cycle investors. And so I think a lot of people have, I'm not saying that traditional VCs and VC firms um, couldn't be better behaved in some regards or be more aggressive. But I think a lot of people have taken a lot of shots at them without really understanding how difficult their job is. So people will often ask me like, "Hey, Semil, like, do you think now you'll work at a big fund and do, Series A and B, and I kind of tell them maybe someday, but right now I would
What
get my clock clean.
what are your investing ambitions?
It's really
What do you
hard.
want to look back and say that you've done as an investor? If
Um,
that's how you primarily.
I don't really know. Like the first ambition is just survival. um, I think like I can take a few paths. I mean, I can stay as a single GP, kind of like Michael Deering has, who's someone I look up to. Um, there's the foundry path of sort of getting bigger and doing concentrated investing and forming a partnership. And there's a lot of appeal to that. I think the appeal of going the single route is that I can just continue to keep on writing, continue to narrow and focus in on the deal flow, and continue to invest more in companies, and maybe make more concentrated investments without having to be um, sort of gated down by infrastructure. The foundry path of creating that kind of $200-300 million fund is appealing to me because I think it would be a lot of fun. I think it would be great to like form the partnership and be the kind of glue that forms it. And there's probably also a path where I sort of say, okay, I did that early stage investing, and now rather than trying to build a platform, does the world need another platform? Does the world need another investment group? Then I would just join one that's already sort of stable and exists. Um, I don't I don't really know. I think I would be happy with any three of those, to be honest. I think there's difficulties in each one. Like the first path, a single GP, it can be probably a lonely path, and no one's truly invested in your success or failure there. And you kind of need people that are going to support you to play offense and defense. I think the path with doing the smaller fund and sort of competing at Series A is that you're really making a large commitment to companies. And again, it goes back to my previous point where I think the Twitterati and all that discussion on the blogs have really discounted how difficult that is. I have a lot of friends who are VCs that have invested in, like, the companies are just turkeys, right? Like there's really not much going on there, and they're like fully committed to it. I think Kanye had a great um, quote, or remember that tweet that he sent out with like
Mhm.
the numbers of like what he learned at VC. Said a lot of his time was spent
Right.
helping companies kind of wind down gracefully. That is absolutely true. Um, I think the third path, the appeal there is that you can just plug and play, and if you're invited into a group that you like, why try to reinvent the wheel? Just go make great investments. Don't try to build a new fund. I think the tricky part there is how do you find a group that you can form a real partnership with, and that is really hard to do. And it comes down to personalities.
What is the macroeconomic climate of investing and fundraising right now in terms of startup raising money, but also funds?
Yeah, so I tweeted about this last night. I think in the early stage, like kind of seed to Series A, people have completely forgot about August, like last July, August, and this January and February. It's like complete amnesia, you know. So I think that people, no, I wouldn't say, full confidence again, but like confidence is coming back. Um, I think in terms of LPs investing in funds, they're very worried because they know that a lot of funds have been created over the last 5 years, and that just by the law of averages, most of them will not return the capital that they took in. So in 2013, I think Cambridge Associates, which tracks a lot of this stuff, I thought this was a really interesting stat. It's actually cited in a post on TechCrunch that Andy Ratcliffe wrote, who's a co-founder of Benchmark, and he said it was either 2012 or 2013 that they published this. That 95% of the returns in venture were generated by about 20 to 30 firms. So if you think about all the new firm creation from 2010 and onward, there's just more and more. So it'll be interesting to see how that tracks. But I think LPs are generally sort of waiting and seeing who's actually going to return funds. That's typically what LPs feel, and so they rush to, invest and stay in the brands that they feel have the best chance of winning big fund after fund after fund. There may be
I
a
was
downer in one
hanging
of
out
those,
with
but you
Next
kind of
Play
stick with it.
Capital the other day, which is effectively NFL players who've pooled money into a fund, and what they've done something pretty smart where they've said, "Hey, we're not the experts in what startups are going to be big, but we know the best funds, and because of our access, we can get into some of these best funds." So they're effectively a fund of funds where they put their money into top funds.
Mm-hmm. Yeah, I mean, I think that's hard to do. Fund to fund model is pretty tough unless people already have the relationship set up. It's not a model I know as well. I don't personally try to target fund to funds because they just don't. They have to go big, I think, to make what they are doing work.
And what is, I want to even go back a little bit. You identify primarily as an investor now, but you were at University of Michigan. You studied history, over a decade ago. What did you think you'd be doing?
Mm-hmm. Probably like most history majors, I had applied to law school, got into law school, deferred, tried out working at a law firm, and worked for the DA of Manhattan. And my boss at the DA's office kind of pulled me aside and just said, "Don't go to law school." Like he spent a lot of time with me, and he just said, "You'd hate it." And I kind of took his advice. So.
When you broke in as an investor and really felt like it, and you said that was January, but let's go back. When do you feel that you broke into sort of Silicon Valley and the sort of Silicon Valley mind share, and when you feel, hey, I'm in this scene right now? No, come on.
January.
Even at a lower level.
Yeah.
2 months ago.
No, January.
Interesting. So that's sort of a big change for you, or big. January is big month.
Yeah, I mean, I say January is because that's when I started to feel like sharper elbows, and I've been kind of insulating myself or insulated from the competitiveness of it.
Yeah, but
and I
how about
started
even
to feel it.
for someone who's not in tech at all, but wants to be, and follows all the guys on Twitter? I mean, you've been sort of friendly and friends with some of the bigger names for a while now. When you first moved here, how long did it take you to sort of get into the?
Yeah, I've written about this. I probably spent 11 months when I first moved here. I think it was about 11 months. I went through the calendar, and I met with 80 startups and about 40 investment firms, kind of with my hat in my hand looking for a job. And I
Wow.
was 0 for 120.
And why do you think they?
Yeah.
They
I think looking back on the investment side, it completely makes sense because really there are just a few exceptional people, like in terms of exceptional backgrounds investing, and so it's like, you're Reid Hoffman and you've started LinkedIn, or you're Keith Raboy and you've angel invested in all these companies, and so of course there's just for everybody else, there's 1,000 people standing behind you that can take the job. And so a lot of it relies on trust and context. And so I didn't have trust with people or context. They were reading what I was writing, and sort of saying like, hey, that's interesting, but it wasn't good enough to establish context and trust. I think on the company side, that was a more disappointing piece because it felt like no one really was, you now look at some of those companies and it's like they never really went anywhere. So it's like, they didn't go anywhere, and really, like, did they not hire me? Did they not hire other people? Like, what happened to them? And so there, I just felt like it was probably kind of ridiculous that people weren't more willing to just like bring on people or do like contract to hire um, stuff. That part I didn't really understand, because you see people and they raise money and they've got a runway of 3 years, and they think, okay, well, what am I going to do in 3 or 4 years? It's like you kind of gotta make a move at some point. Otherwise, after a while, like, even investors won't want to talk to you, right? Like, they're like, the startup people feel like things take a while to kind of bake, like the Pinterest story. But in reality, like, investors care about how long ago a company was funded and what the trajectory is. So most people can kind of just sit in their runway and hang around, and they don't realize that when they go try to raise
Yeah.
in 3 years,
It's interesting.
investors
This
like, so
concept of
what happened in
survival is
three
interesting,
years?
because I remember,
Yeah.
just asking you throughout the last, couple of years that we've known each other, um, sort of higher level
Mhm.
ambition questions, and you say the first thing is survival. Is that something that you've always sort of identified with, or what is?
Um, it means you get
Yeah,
to invest,
mhm,
I get to write a check this month and next year, and
yeah,
just the chance to do that. That's survival. And um, I think you think about it because you're partly paranoid that you may not have the chance.
is
So
that
you
something
don't
that
take it
you've
for
had
granted.
during your time in the
Uh,
valley, this or growing up, this concept of survival?
no, it pretty much, yeah, it pretty much started when I was here, when I was trying to transition from what I was doing earlier, and kind of going through that 11-month process
Right.
of like, holy
Yeah.
shit, you know. Yeah. And not that I wasn't like hardworking before, but I never, I literally think there's a chance I won't raise the next fund.
Yeah.
So I just try to
Okay, so
make
we're
this
going
one as best
to
as I can.
uh, play a couple games. The first one is it's a combination of overrated, underrated. I'm going to say a space or an industry or a
Okay.
product, and I want you to say sort of quickly
Okay.
whether it's overrated, underrated, or what you think about it, and what you
Uh-huh.
think the future of it is. And if
Okay.
so, first, virtual reality.
Hmm. I think it's probably, there's a lot of hype around it, but I think it's probably underrated, in the sense that people just think about gaming and kind of social interactions now. But I think that if it hits and it takes more screen time away from what we do or where we operate, it could change the nature of a lot of things and really not cost a ton of money to make that transformation. It's benefited from like piece. You hear this phrase like dividends of the smartphone wars. Um, So yeah, I would say probably underrated. Although like right now there's a lot of hype around it, I still think it will take a really long time. Um, yeah, I made one investment in my first fund called Altspace VR. That has been since funded by Tencent in a pretty big way. And the idea is that if you're in Austin and I'm here and Ryan is in LA and we want to watch the opening day of the Giants on, we could stream it through a browser. So it's a way to consume digital media over the web synchronously where people are in disparate places. It's really like a browser technology made for delivering streaming media in a VR environment. Uh-oh, are you there?
Can you hear me, guys?
Yeah, yeah. Are you on some hotel Airbnb Wi-Fi? Hmm. No problem.
Intelligence.
Um, Again, it's super hyped right now, but I think overall underrated. You and I are probably already using the kind of first generation of consumer grade tools that are learning and sort of proactively pinging us. And so I think of it as like before you have on Facebook networks of people or Twitter networks of people. Just think about if those people were machines uh, and they were able to, get better and better data and then anticipate events and um, communicate with us. We're already starting to see that. So probably long term, probably right now, again, overrated like VR, but kind of long term underrated. Ooh. Um, I don't know where I'd come out underrated, overrated right now. I mean, I feel like people are kind of crapping on it everywhere. What I've heard from friends in the community, and I don't stay as close to it, and I made a few investments in like my first two funds, so I wanted to see how that's going to play out. But it sounds like there's some fracturing of thought in the community there, and so my bet has always been that like the vertical application will prove it, and so what's that kind of killer app? And I always felt like it would be somewhere in financial services. So will that happen in the next 5 years? I mean, I don't know.
How
TB.
about how about the on-demand economy?
Oh wow. That's one that I've really spent time in thinking about investing up and down the stack. Um, it turns out most things aren't quote on demand. There are very few things that are really on demand. It's more the feel of it. So right now, I think it's getting hammered and probably rightfully so in the sense that it was super hot a year ago and people are starting to figure out, well, like, okay, what's going to be independent and what's not. um, so right now, is it overrated, underrated? I would say probably a little bit underrated. Is that I think we're going to see some interesting activity in the space. But yeah, inherently most things are not on demand to begin with.
Let's talk about self-driving cars, and of course with Cruise.
Oh
Just
yeah, that was really fun to see.
yeah, talk about that a little
Wanted to
bit.
make sure. Yeah. So again, just from the investment standpoint, and after you talk to lots of LPs and you go through the process of raising your own funds, you realize that the results like that, from an investment point of view, really are the only things that matter. And probably a lot of people had access to do this deal. Uh, it also started off with a partnership or kind of strategic investment decision, which a lot of talking heads say are bad. And then there's been this cult around, we're trying to build an independent company. And so I think it was just great to see that happened to good people who were building really good things. And congrats to those people and the people that took the risk in investing in them, because it wasn't probably clear a few years ago. Well, like, hey, who's going to acquire this, or how am I going to get my money back? So those people probably weren't thinking that way.
Um, we haven't gotten into that is so underrated that people don't even bring it up. Um,
Mm. That is so underrated. People don't bring it up. I mean, two answers. So one, to kind of talk my book, is industrial internet. I'm betting on that as a piece of this fund. But two, much more importantly than that, is I think, where do we pay? Where does everyone online or who's reading stuff? Um, and this is why I think the cruise news is very interesting and why I wanted to talk about it. where do we spend time and who do we pay attention to, in terms of who we read, what companies we follow, right? Like, should we have spent 2 days talking about people at Zenefits having sex in the stairwell, or should we have been promoting the authors and the writers and the journalists and the VCs that were investing in more frontier tech and covering that? So I think that's a very interesting question, of where people, you either spend your money or your time or both, and where do people do that? What matters to people? And so that's why I think this news kind of snaps everyone to attention, right? Like, what does matter? The VCs are generally only really getting credit when you have these big outcomes, right? And everyone wants to be part of an outcome. So what should we be talking about?
That makes a lot of sense. Do you think Y Combinator will be uh, disrupted, or will continue to sort of have a monopoly on that space?
Um, Normally, I would say that anyone can be disrupted, but I think that they will not, because of a few reasons. One is, I think that they're paranoid to begin with, and so they're trying to stay ahead of everything. Two, I think they've created an integrated funnel from, YC Research, YC Fellows, YC Accelerator, Continuity. Three, I think their current leader is really ambitious and sort of will have an idea and then has a team to execute against the idea, and they don't really make many mistakes. And then three or four, I think they'll start to verticalize and start to have programs that attract certain types of founders to certain types of investors. And so, 5 years from now, demo day, there could be one demo day that's just about health and IT and biotechnology. And, I probably won't go to that demo day. But then they'll be able to get the right people in for that, for that particular day. And also, they can just tweak their model, right? Like, they can, instead of asking for 7%, they can make it 4%, right? It's not an expensive endeavor to run. And then they're always going to have a crop of people that will want to work there. So I almost think it's like an unstoppable network effect. If it trends to the point where they can't take equity for services and they have to pay more, they can just raise more money.
And what's their core competence? Like, are they just aggregating the best talent? What are they best at?
Well, if you talk to people who are in Y Combinator and then come out, I think it's easy, especially for investors, to kind of say like, "Hey, what are they doing?" Or they're taking too much of a chunk of your company. But they are actually teaching them a lot when they're in there. I actually just had in the office here two gentlemen from Y Combinator who left academia and were coming here, and they learned how to do their drip campaigns, look at a market vertical, start to talk to customers. Where are you going to get that? You're not going to get that from a seed VC. You're not going to get that from a VC firm. So I think a lot of people, especially institutional investors, underestimate how much value at the early stages Y Combinator is bringing, and
Yeah,
and overvalue how much value that they bring.
yeah, no, it's interesting. So I want to play the second game, which is want to say a name of a prominent individual
Okay.
in Silicon Valley that, or just tech in general, that we both really respect, and I
Mm-hmm.
want you to either say something that's sort of uniquely impressive about them that we may not get on the surface, or somewhere where you have sort of a nuanced
Okay.
disagreement with them on something.
Oh yeah, and
You
I'm
know,
happy to answer so long as I've met and spent time with that person.
yeah, absolutely. And if you haven't,
Yeah.
we'll go right by. Starting with some people that you have, Keith Raboy.
Oh boy. Um, you know, Keith, I would say if he feels like you're both intelligent, hardworking, and earnest and talented in some way, will really go out of his way to help. And I've seen it with a lot of companies, and he'll meet anybody with a strong recommendation. And I saw the other side of when I worked at a company where Keith was an early investor, is that, like, and I think this is what great about Keith. He doesn't like to repeat himself. So I think that, if the company is kind of not going the same way and you go back to Keith for advice and he's kind of like, hey guys, didn't we talk about that the last time? Like,
Right.
why are you wasting my time? And I like that about him. I think online he can kind of come off as, he uses very strong opinionated language. But what I find is when he engages with people, even if it comes off in that harsh way, he's actually paying them attention. It means that he respects their opinion. Um, and I will say, having followed a lot of people's opinions online, and the reason I did that video show with him is that I thought he was one of a very few number of people that will be willing to make a public opinion and risk being wrong. It just turns out that 7 out of 10 times he's really right. And it's very uncanny. So the intellect level that he has is just off the charts and very consistent. So yeah, that's what I would say about Keith. And I have sent him a lot of entrepreneurs that he has met, and they all come back and say that was a great meeting with Keith. They don't say like, Keith wined and dined us, and Keith, did this and did that. They really enjoy the chance to meet Keith. He's very direct in the meeting, and maybe he doesn't invest, but they feel like it was a good discussion, and that's not the feedback you get from everybody.
Right. How about I mean, something Keith has said is, and Keith's been very, very good to me as well, is that 70% of VCs provide negative value.
Well, so Vinod said that.
Okay, but I said that. My mistake.
Okay, so when Kanye tweeted out that list that of things that he was telling someone about what to expect in VC, you should actually read that whole thread, because when Keith gets involved, he basically says that like most VCs actually in there, like it's brand and network, and most of the other stuff, the operational stuff, the helping on product and PR, that's just a lot of noise. Partially because the LPs want everyone to have the same nuclear weapons in the arms race, but also it's just the sales process of getting an investment. And so really when you dig down into it, who's helping who do what? I think a lot of people find that out the hard way after they take an investment.
Bill Gurley, if you spend any time with him.
I only, Bill and I have communicated a lot online. I only just really recently met him and hung out with him. So I can't really say. I mean, I certainly read what he's written, everything, but I don't know him as a person yet to really answer, whereas I do know Keith. But I'd love to get to know Bill better. I'm sorry? Oh yeah. So I mean, I've been friends with Scott for years, who's a new partner. I haven't met Eric. Bill, Matt, I met many, many years ago, but he's kind of a hard guy to meet. Peter, I usually meet with a couple times a year. Peter is incredibly thoughtful about the craft of company building. And I've heard this from many entrepreneurs that have been early employees in the companies that he's backed, that he's extremely active. So if he makes a commitment to Product Hunt, I mean, he's going to be in there. And I think he's really good about focusing his attention and commitment, and very unique. If you watch the videos that I did with him, I get emails every year from other VCs who are like, I listened to that whole thing and I learned a ton. And that's because he kind of grew up in that world. His dad started Trinity Ventures. And so Peter is one of the most professional VCs out there. And he does not lose a deal. Like I've heard many VCs just say like, they're happy to compete with anyone, and like they don't want to compete with Peter. Mm-hmm. I know Scott really well, and we've co-invested together a bunch, and he's been a supporter of my funds for a long time. I think with Scott is like the best way to describe it is that he's a classy person to everyone that he meets. He doesn't care if someone is Bill Gurley or someone is Bill Jones. He really doesn't care. And he doesn't overextend himself. And I think you kind of saw on Twitter that a lot of people were super excited when that happened. And that wasn't out of the blue. I think a lot of people had met him and realized like, wow, that person actually really listened to what I said, followed up, got back to me, didn't overcommit, and was sort of helpful, right?
Presenting themselves is an interesting one. What does that mean to you, and why is that so important?
Because I think in a competitive environment, especially like investing, you can have a perverse incentive to kind of say, you know, to do anything to win a deal or win mind share. I'll do this, or I can do that, or I can do this, and blah blah blah. And before you know it, you start making promises you can't keep. Uh, so when I think of a common trait between Peter and Scott is that they will politely kind of say no or disengage. But if they say yes, there's a lot of oomph that comes behind the yes, right? And there are very few people who do that because they're afraid of saying no to miss out. That's why it's hard and rare. I've never met Mark.
If
I've
you guys talk.
interacted with him a bunch, a lot. I mean, I would love to sit down with Mark. I mean, he strikes me as his sort of mental CPU is like off the charts smart. And I think he reads about a lot of different things, like how society works, how technology works, and all these things. It's real intellectual. I hope he comes back on Twitter. I think he probably got a talking to from a bunch of people, to kind of cool it. But I think that his ideas and evangelism is pretty infectious. So, the ideas win on Twitter, right? His ideas. I actually think there's a great talk that he gave at Stanford University. If you Google or YouTube search for Stanford GSB Mark Andreessen, he'll even talk about 20 minutes about how in the last 200 years, like there have been X number of new countries formed and how that rate of country formation has increased. And moving forward, we may see newer countries emerging, fracturing from previous countries. And so I think he thinks about the future in a way that a lot of people just can't. Yeah.
Who, when you think of the term success, you know, let's say in the investing world,
Mhm.
who comes to mind and why is someone that you want to emulate? Before you said Brad Feld or Foundry Group, maybe that's the answer. But who
Mhm.
are some other people?
Well, it matters less what I say, but if you talk to every pro VC, meaning like they've been a VC for a while, they've returned capital, they pretty much all unequivocally say Fred Wilson.
Oh,
Um, One is I think that they respect the fact that um, he started off in the business, was trained, and then he had his first fund that was doing well, and then it imploded. Uh, Two, I think they respect the fact that he created his own new fund from the ashes of the previous one that imploded and caught a number of waves. I think three, they respect that he hasn't, he's grown his partnership, but he hasn't really increased the size of his funds. Um, and I think that he gets in so early and has such a track record that people are always going to follow what he's doing. Uh, and so I would say, like in terms of not like monetary success, because I think that's just a byproduct of who he is, and I have spent quite a bit of time with him. It's just the whole picture of creating your own fund, being thematic, being early, taking all those risks, and being already proving to have been right so many times. And also in the portfolio, there's things that are sitting in there that are going to be right as well. That level of consistency, I think people view him as the most successful because of that body of work, that whole package.
yeah, no, it's interesting. Um, the last cue I want to sort of get your opinion on is this concept of when of sort of um, you know career advice, or in terms of when people are thinking what to do next, like in your various different transition points, what resources were most helpful to you, or who did you sort of it was your first person that you went to consistently, or what's something you advise to other people?
Uh, um, I don't know if I'll have a great answer for that, unfortunately. Um, I think I would go back to something I said earlier, which is I just found by trying to listen and help other people that I just got invited to more conversations, and then opportunities tried to arise from that. I didn't go out and say I want to be a head of marketing at a B2B company. I don't know how to get that role. Um, so it just really depends on sort of a function of how lost you are, and then sort of who you naturally gravitate with. But I think a lot of it comes down to listening.
Mhm.
Um, I think I mean, I can do better, but I think a lot of people don't really listen. And a lot of people in conversation will give you clues on how to be helpful, but it requires very active listening and then follow up. A lot of people just don't follow up.
Emil, I want to be respectful of your time. Thank you for taking the time to chat with us today. You've been a friend, you've been a supporter, and we really appreciate what you do in the startup ecosystem
Oh, thank you. Yeah,
in
and we'll
general.
do it next year. And you as well. Thanks for having me on.
Absolutely. Thank you, and hang soon.
Okay.
Have a great rest of your day, and I'll
Okay.
talk to you
Enjoy.
later.
Awesome. Yep.
Will do. All right. Take it easy, Semil. Okay. Thank you, everybody, for joining another episode of Product Hunt Live. This has been a fascinating one. Make sure to tweet at Semil, Semil. Let him know you enjoyed it. Give some feedback, whatever reach out. Semil is very, very helpful, especially on Twitter and or email. And just in general, a fantastic guy. Been super helpful since the very beginning of Product Hunt to Ryan to the rest of the team, and a real example of how people can break into the industry. Thank you guys for joining. If you have any feedback, tweet at Product Hunt or at Eric Torenberg, and let us know who else you want on next. If you have any other questions for Semil, ask him directly on Twitter, and definitely make sure to follow him. And great. Until another time at on Product Hunt Live. Have a great weekend, everybody. The Product Hunt team is at South by Southwest, and we will be doing some cool stuff. I'm gonna go take a quick nap, and yeah, have a great day, everybody, and a great weekend.